Hello there everybody, a very, very good morning to you all and welcome back to howtotrade.com and welcome back to another live stream here in our trading room and across our social media channels as well. I obviously was not here all of last week, so it's very good to welcome you all back to my streams. Hopefully you've been enjoying Shane's streams. I think he put a couple of extra ones in there as well last week, so hopefully you didn't miss out too much, and if you prefer Shane to me, then you've had a great week. But no, it's good to be back. Apart from the fact it is absolutely freezing, raining, dark, cold in the UK at the moment. So a bit different to sunny Mexico where I've just come from. But it's okay. We've got the jumpers on and we're bracing up for the cold season. And summer is over for me anyway. But it is good to be back and back involved in the market. So I didn't trade at all last week, of course, but I'll be lying to say that I didn't keep up to date with what was going on in the markets. I did have one eye on the NFP figures, and I had another eye on the US CPI figures. So I do know what happened, and I know really what's been going on, and it's been really a story of stock market strength, a story of that soft landing narrative which we spoke about. And if you remember, probably before I went away on holiday, we spoke about how important the jobs reports now are, because obviously a lot of expectation for interest rate cuts, large cuts sort of thing, 50 basis point cuts, and for that stock market, it really needed to see a jobs market which isn't declining too rapidly and is still showing robustness. Well, that NFP figure we got, not last Friday, the Friday before, definitely showed that. As soon as I saw those figures, I thought, that's positive for the stock market indeed. And as you can see, we're at all-time highs again on the Dow Jones and on the S&P 500 as well. So no real surprise there from me. And then the inflation declined, but came in slightly higher than expectations, which again was another positive report. It's been a positive week really for risk assets, apart from the obvious war escalations over in the Middle East. It's put maybe a bit of uncertainty around what's coming up in the next few months, but overall it's a pretty good set of figures we saw from the data we had out. So good to see you all in the trading room, and welcome back to my streams. Bruce over on the YouTube channel. Who else we got? Wizard Alvin, hello to you. Good to see you. Saeed, hello. Thank you very much. It's good to be back. Hello to you, Jeanette, as well. Wizard Alvin, so your streams are more... I'm not even going to repeat that. Wizard Alvin. Shocking. But yes, you could say that. Dillaby, good morning to you. I had a very good vacation. It is good to be back. I'm not going away again from now till Christmas time. So you've got me for the full period now. So let's just dive in, shall we? I'm a little bit jet lagged, to be honest. I landed late last night. For me right now, this is actually 5 o'clock in the morning, is what my brain thinks it is. I managed to sleep, even though I managed to sleep quite late last night. So I'm a little bit tired. I haven't really done my thing where I load up the charts again after coming back and then looking through the opportunities. I haven't done that yet. And basically looking at what the analysis I had before, removing it, updating it, and going through my red list of markets. So I thought this would be a good opportunity to do that with you. So basically what I'm going to do is I'm going to go through the top events as normal. So we'll see what events we've got coming out this week. We won't talk about the past. We'll talk about what's coming out. And then I'm going to go straight into the chart, and I'm going to go top to bottom my red list of markets, which is pretty much all the US majors, gold, stock markets and oil and stuff like that. All the main ones. If there's ones that I haven't covered that you want me to, then I can do that as well. And I'm basically going to show you exactly what I do on every Monday, particularly when I come back from a holiday or from a break in the markets, and how I then update my analysis. I'm going to show you how I do that from top to bottom, and see if we're going to get any... Oh, I've got dust on my microphone because it's been so long. It feels like I've been away for a lot longer. But hopefully that will give you an insight into basically how I'm seeing things at the moment, okay? Okay, good stuff. Rainier, hello. Thank you very much for the welcome back message, and it's good to see you. For those of you maybe who have joined over the last week, you probably haven't seen my stream, so pop up and say hello. I'm just one of the other coaches. It's me and Shane here. We're the two coaches here at How to Trade. I cover mainly the UK and European session, and Shane covers the US sessions. But yes, right. Okay, let's dive in first of all to the high impact news events we've got coming up over the next 7 days. So basically I've filtered our economic calendar to the next 7 days. We're interested up until, when's Friday? What date's Friday? I don't even know what date it is anymore. It's the 18th. So we're interested to basically in this everything we've got here from October the 16th to October the 18th. When the day comes out and there's medium impact news, I do take a look at it, but mainly when I do my week ahead analysis, I always look for the high impact news just to give me an idea of what to expect. Shouldn't take too long. It's not a particularly busy week in terms of US data. To be honest with you, it's that the action is really over in Europe. It's October the 14th today. It's Monday, October the 14th. As you can see, we have no high impact news events today, so we don't need to worry too much about that, which is good for me because it gives me a time to sort of catch up with everything in my analysis. October the 15th, which is on Tuesday, again, no high impact news events. So really, I have no excuse to have not been caught up by then. And then as we head into Wednesday morning, you can see that we've got UK consumer price index data, which basically is our UK inflation figures. So for me, that's particularly, that puts my eyes firmly on cable, on the pound versus the US dollar, and we'll see how that goes. Looking at the current expectations, the current expectations are for inflation to have fallen to below the Bank of England's target, 1.9%. It has a target of 2%, 1.9% they'll be happy with as well. So we'll see how we go on that. But that core CPI figure you can see is still up at 3.5%. They'll want to get that down if they can. And that's really the main event for Wednesday. So if you're a trader of the pound, the Great British Pound sterling, then Wednesday is the day for you. And as we head into Thursday's session, we have a little bit more news coming out. The main event really of this week will be the ECB monetary policy decision. Basically, the ECB, the European Central Bank, they will deliver its next interest rate decision. I will come on the stream and I'm going to cover that event live for you on Wednesday, with particular interest in the DAX, the German stock index, and of course Euro pairs as well. So I'll see what the ECB decide to do on Wednesday, and then we have our first real high impact news event coming out of the US, which is their retail sales figures. I don't hold it, as high as inflation and interest rates and jobs data, but retail sales is a high impact news event, so there may be some good scalping opportunities on Wednesday in the US markets. We have a ECB press conference as well, and then as we head into Friday session, again, not a great deal really. Overnight we've got some China data, so that could feed into risk sentiment, that could feed into the stock market, especially if you're a trader of Asian stocks, but also that would likely have a knock-on effect on other on US stocks as well, and European stock markets, just the global stock market as a whole, with China being such a big powerhouse economy, and UK retail sales as well. I mean, I'll be honest, it's probably in terms of weeks, it's pretty slow. There's not anything there which I'm going, wow, that's going to really move the goalpost. It's really going to change things. It's not going to be that sort of week. But we could definitely get opportunities here. We're heading out of the summer season. We've had a really volatile summer in comparison to other summers. And we're heading into, October, November, December. They're good months to trade. They are typically good months to trade. So we still can get some really nice market moves, okay? If you have just joined, or if you're following this stream today and you're potentially looking for a brokerage to trade with, then if you head over to switchmarkets.com, which is our brokerage basically, they've got a deal going on at the moment where they will match your deposit up to $5,000 in credit. So if you deposit $2,500, they'll match it another $2,500, up to $5,000 you can do that with. Head over to switchmarkets.com to find out more, or you can message me for more details on that as well. However you want to do that is fine. Okay, right, now for the interesting bit. So before I do this, full disclaimer, this is the way that I see the markets, of course. This is my analysis. This is exactly what I do, and how I analyze markets at the moment. Because I do tweak my strategy a little bit, tweak my views a little bit sometimes. It's probably the nature of being a market coach, is that I sort of adopt other things and I improve on what I already know. And I'm going to go through from top to bottom on how I see the markets at the moment. So you'll probably notice that I would have market drawings on there from before. And if I do, and it's a little bit confusing, I do apologize. I will clear it up for you. And I'm basically just going to talk through how I would do it, or if I wasn't doing this on stream, I would have done this in the morning if I wasn't so jet lagged. I'm going to show you how I do it now. So hopefully that makes sense to you. So let's start at the top. This is my red list of markets. We're going to start at the top on the pound versus the US dollar. And I always start on the daily time frame. And what I do is I mark basically the most recent swing move. So from top to bottom or from bottom to top. And there we have our Fibonacci retracement, which has the levels of 38.2, the 50 and the 61.8. They're the levels that I use, particularly use the 61.8. So at the moment, you can see that not really as much has happened. We're probably in a ranging market. I'm actually potentially looking for a breakdown below this low. So as it stands at the moment on cable, although we have seen quite a few days or a couple of weeks of downside, we are still within bullish structure because we haven't broken this low yet. Therefore, that's why you can see that volatility, and you can see that volume start to decrease in cable. It's probably been quite a frustrating market to trade, I suppose, for you guys. Obviously not been here, but I imagine this has been quite frustrating. But it is grinding to the downside, but it is starting to find some support. This for me is a situation, this is a no trade situation. Why is that? Well, because we're not at any key levels within the bullish structure, i.e. we're not at the 38.2 or the 61.8, so I can't start to dive into those lower time frames and look for those FVGs and those order blocks. And at the same time, I'm not going to class this as a bearish leg. I'm not going to do that. It's too risky. We haven't had the market structure form yet. So instead, what I'm waiting for, as you can see, is, and I marked this before I went away, wait for a liquidity sweep or break of low. And that's my note to me, that every time I look at cable, how are we around that? Are we going to get a liquidity sweep on that low? So we're going to get this. Okay, or are we going to get a breakdown, a full body candle closure below that low, and then we can say, right, now we've got our bearish leg, and now we can look for selling opportunities. Okay, so cable, pound versus the US dollar is a no trade for me at the moment. This is not the same for euro dollar, and I cheated a little bit because I've done this morning. In fact, I think I might have done this on my phone while I was on the beach. That is the beauty of trading. I spoke about euro dollar being within this range, really between 1.12 and 1.1. You can see what happened. The market took the liquidity of that high, then moved down towards the low, and I set myself a note exactly the same as that note, which basically was wait for either a liquidity sweep at this low or a break of this low. Well, what have we got? We've got a break of this low. You can see that really clearly. So what does that now mean? We've now got our bearish leg on euro dollar, which is from this top of this liquidity sweep down to the low that was printed on Thursday last week. As at the moment, I will update it if we continue lower. And really, I'm not looking to sell it right now because we have already extended quite far to the downside. But what I'm looking for is a pullback into one of these key areas, the 38.2, the 50, or the 61.8. Now you're probably asking, well, how do you know which one? Because there's three of them there. Well, how I know which one is when the, my real analysis comes in, which is basically, it's quite simple. Is I then drop down to the 4-hour time frame, and I turn on my Smart Money Concepts indicator, and I look for either an FVG or an order block to look to sell from any of those key levels. So if I look at this first key level, you can actually see that it hasn't marked this as an order block, but I do like this level. I do like this area. That's a 26 pip stop loss. And obviously our target would be is always the 0 level, basically the end of the key low or the key high. And that's that key low that was printed. So I like that as a potential opportunity. I may probably look to place that one myself. If that one fails, then there's another opportunity that's coming at the 61.8, which would be my preferred level. And what is that? Well, you can see 50% of the fair value gap printed here, which sits roughly around the 61.8. That's a good enough confluence for me. And I'd probably cover, well, you can see that I'm covering this high here, because we could come up and fill this fair value gap as well, or this imbalance, whatever you want to call it. And so that's another potential opportunity on euro dollar that I'm shaping up over the next, coming days or weeks. And that really becomes the backbone of my analysis. And once I've done that, all I do is I place the sell limits or the buy limits, and then I turn off the chart. And I only really need to come back to it should we get a move up to any of these entries. Okay. If the market, swerves me and creates a new low again, then I'll just update my analysis accordingly. I'll just move the goalpost down. I'll have a look at our new leg, our new swing leg, and then I'll update that accordingly. So as you can see right now, there's a lot more opportunity in euro dollar than there is pound dollar. And that's the way that I'm looking at that at the moment. USD yen, a little bit of a mess. I'm going to tidy this up for you now. Basically on dollar yen, we were within a let me turn this off. And let me just quickly check there's no questions, just as I'm going through. Okay, we're all good. This was our bearish swing leg. You can see from top to bottom, and you can see, we had some reactions in there, but then the market started to break higher, and we actually got broke above all this supply zone. You can see that start retest as well, and then it's moving higher again. And so actually, bearish for so long on dollar yen, and it's been a good ride. But now I'm looking for buying opportunities on dollar yen. We've now broken above this high. That's a break of structure. And our swing low starts here. And really what we're now waiting for is for the high to be printed. Okay. I did have this marked. Where is it? Like that. But you can see over the last couple of days, we're pressing on this high again. So another situation where I'm not looking to buy it at these highs. You can do if you want to, but I always look for premium and discount buying opportunities, and premium selling opportunities is what I like to call them. And they come once the I call it the leg, which basically is the move from swing low to swing high, has been completed, and then we're waiting for retracement into any of these key areas, 38.2, 50, or the 61.8, and into an order block or an FVG within that area. I hope that makes sense. So we haven't got that yet on dollar yen. I'm bullish on the fact that we've broken above structure highs. We're looking like we're even going to break above this one as well. And so really what I'm waiting for is I'm waiting for the new high to be printed and for this leg to be completed. And then I will mark my Fibonacci and then dive down onto the lower time frames. And typically what I do is I risk 2% on the 4-hour and daily, and I risk 1% on the hourly and the 15-minute as well. USD CAD, again, there was our bearish leg that got broken. We're now into a new bullish leg, which hasn't been completed yet, but it's as you can see, it's been quite remarkable, really. What was that? 1, 2, 3, 4, 5, 6, 7, 8 days of upside. So I'm not looking to buy it here unless I was already in. I think I actually took a loss on the sell on somewhere around here, and as you can see, once our stock got stopped out of the trade, that's why it's important to have stop losses in. You can see the market then surged higher. So again, I'm waiting for this new leg I'm waiting for this existing leg to finish, and then I'm waiting for the retracement down into one of our key areas, but that has not happened yet. So USD CAD is a no trade. And remember, trading is, 90% of the time trading is, sitting and waiting. Okay, we've got a bit of an interesting situation here on USD versus the Swiss franc, because this was the Fibonacci retracement that I had marked from this low down to this low. And you can see that we did respect the 38.2 on quite a few occasions. We actually managed to get a really nice selling opportunity, a selling trade. I think it was at one of these tests. We did eventually get stopped out at entry, but we did manage to take 1 or 2% out of the market there. The market's now started to shift, but you can see where we're trading at the moment, which is right on this 61.8, and you can see it has started to act as resistance. And if it wasn't for the fact that you can quite clearly see a bullish breakout on the US dollar, I'll potentially look to try and trade this. But instead, what I'm looking for is I'm going to delete that. Because we had a break of structure there. Break of structure. And therefore, this is now our new structure move. Lower time frames, have we got any order blocks or fair value gaps that sit? Yes, we do. Just make sure the hourly time frame isn't clearer. So there's quite a lot of support here coming in at the 50. I quite like this level. Yeah, that's nice. And this is basically what I do. So I'm basically diving down onto the lower time frames. That's quite a big area to look to. That area is quite big. Not really interested in that area, to be honest. I actually do like this support area here. So we're now on the 1 hour time frame, but we've analysed from the daily. So I quite like the look of 18 pips stop loss, 5.59 risk reward should we get up there. I like this trade. This is a 1% trade for me. And there's also what you can see, which is really, really important, is you can see that 0.85, that psychological whole number support as well. Yeah, that is so true, Dillaby. It is, the market pays you to wait. Once I've done this analysis on all of the markets and everything's clear and I set my limits in, all I've got to do every day is when I wake up, is just have a quick check. Has anything changed? Nope. Okay, boom, gone. See you later. If you start, I've found anyway, unless you're a scalper on a 1 minute or 5 minute time frame, which I just find so stressful, I find this a lot calmer way to trade, which is use the higher time frame, get your structure in, find your areas of interest, zoom in on the lower time frames, find your specific entries, set your limits, which basically is set your market orders, and then just let it all go and just wait. So that's another potential opportunity on USD Swiss franc, which I like. Obviously, we are right at the top of this swing move, so should we breach this high, then everything gets invalidated and we start again. AED USD. Okay. What have we got here? No reaction from that move. This is a bit of a difficult market to trade. It's exactly the same as the pound versus US dollar. It feels very similar. We can see actually we are still within bullish structure, and we are within bullish structure until we get a breakdown below this low. Now, in terms of Fibonacci, in terms of key areas for me, There aren't any, because you can see we've actually breached the 61.8 and it's now almost acted as resistance. So there is an opportunity available. Not one that I would take because it doesn't follow my rules, but there is quite a clear bullish order block, daily order block at 0.66756. And if you still think there's some dollar weakness to come, which I think there could be, the Federal Reserve are still cutting, but anyway, regardless, not talking about that, not talking about fundamentals, then that is a decent textbook sort of order block or demand zone that we could potentially look to buy from. It doesn't really follow the rules of how I trade because it doesn't sit on a key level within this Fibonacci, but it is a real discounted buy area when you consider this is the bullish leg and this is the bullish structure we see. And in terms of what markets are holding up best against the dollar, the Aussie dollar seems to be holding up pretty well on the higher time frames when you zoom out. So yeah, I'll have a think about this one. If I place this, I would say I'd have when I analyse my trade after I've placed it, I always give myself a score out of 5, which is whether I've followed the rules of my strategy or not. I'd probably say this is like a 3. And the reason it's a 3 out of 5 is because I haven't executed within a key level of the Fibonacci, which is within the big swing move. So yeah, that's an interesting one. I'm probably not going to place it, but I would like to point this out for you. This could be a good area to buy Aussie dollar, US dollar. There could be some good support coming in there. But I'm going to wait to see how we react from it and how we, more importantly, what happens with this low. Does it hold? We'll probably see over the next few days. Hey, finally, we're out of the Forex market and we're into gold. And my analysis on gold stands. I was very, very, very unlucky. On gold, to be honest with you. I'm quite frustrated, but it doesn't matter. This was my bullish leg. Swing low to swing high. There's my Fibonacci. I moved down onto the lower time frames. Okay. And I said to myself, okay, what's happening here? Is there any area we could look to potentially buy gold from? Well, there was. It's been removed now because it's been filled. Well, sort of been filled. You can see my entry was at 2,600.5. I had so much confluence here. Not only did I have imbalance or a fair value gap, which was marked on this indicator at some stage. I don't know why it's gone now. 50% of that fair value gap was at 2,599. We had this previous wick, which is almost like our previous high that which we broke here. And we had the 61.8% Fibonacci. Sorry. Which sat there at 2,605. And I set my order at 2,600. Now, when I look back and I say, what lesson could I learn here? Well, really, my entry should have factored in that we may not get down there and we may just react straight away from the 61.8. Because that's exactly what it did. And I'll be coming on to you guys and saying, look, I'm at 4. I reached 4.5 to 1 here on gold. But instead I'm coming on and saying I was swerved by not a lot. The market reached 2602.53 and then shot to the upside, and I'm now left feeling frustrated. So that is also the nature of trading. You can wait and wait and wait, and you can get so close to your entry, and you can probably say, I would probably say there I made a slight mistake. I tried being a bit greedy in terms of the level I tried to get in at. I should have set my entry above where that imbalance was, because we had potential support at the 61.8, and there was a chance that we would react straight away from the 61.8 and not actually come down in towards this imbalance. And that's exactly what happened. Now what do I do? Well, you can see that now we've had that reaction. I'm going to delete that order. In fact, I'm going to do it now. I'm going to delete that order. I'm going to delete everything I've done, and I'm going to start again. But I will put a note in my trading journal to say, Connor, don't do that again, basically. So yeah, I could delete those alerts. And for gold now, I mean, it's in an area where I'm not interested in buying it up here now. Now we've come so far, up to 2660. Let's just see how we go here. Let's just see how we react to this high. Are we going to come up and create a new high again? And if we do, then we start again and we look for those areas. But for right now, gold for me is not in any particular area of interest. And I'm certainly not going to look to sell it. I think that's brave. Very, very brave. Because obviously the higher time frames are very bullish right now. Okay, oil. I've got some high hopes for oil. Again, I was left feeling a little bit frustrated on oil because here's my Fibonacci, which is from this swing high to this swing low, which tells me that that's our most recent bullish leg because we broke above this high. So that's my new structure. And then, because I did this on holiday as well. Full disclosure, I did this on holiday as well. That's why the Fibonacci weren't quite lined up perfectly. And then I said to myself, right, okay, perfect. There's my Fibonacci retracement. My key areas are in play here. Do we get anything, or can we see anything that we can look to potentially buy from? Well, the 4-hour chart isn't that clear for me. Sorry, no, the 4-hour chart is clear for me because we had a 4-hour bullish order block which sits right at the 61.8. As good a confluence as I can get, as well as I can follow my rules. Well, you can see the market come down to 71.5. My entry was at 71. We then started to shoot higher, but we didn't breach this high, which I'm happy about, and we're starting to potentially come lower again. So for me, this buy limit that I've got placed is still valid, and I'm still looking for that move on oil, to be honest with you. If we do get a breakdown below and my trade fails, then we can just wait for that. Then it's probably likely that we're going to make a move down towards probably 60, 68, or maybe even come down towards this low. But with the tensions in the Middle East as they are, or the war in the Middle East as they are, I'm pretty bullish on oil at the moment. I'm just waiting for that 71 level to be hit. Hopefully, fingers crossed, that can be hit this week. So that analysis stays. I'm happy with that. Okay, now onto the stock market. Very, very difficult. Very, very difficult indeed. I had high hopes for these trades. Here's the US 30. There's my Fibonacci. There's my key areas. Let me just stop for a second just to see if there's any questions. Hello, Bobby. Thank you very much. It's good to see you. Thank you very much for the kind message. And hello to you, Matthew, as well. And thank you very much for coming back to my streams. So I had some limits in for US 30. And as you can see, I got close-ish, but never got tagged in. So I'm going to delete that because we've breached this high now. So I'm going to delete that. And I'm going to delete my alerts. Okay. I'm going to delete that. And that. And that Fibonacci. Now then. A little bit more difficult to analyse this because we've come up so far. So if you want to be really aggressive, and this is probably a Fibonacci that I imagine Shane would highlight, you could probably use this, but it's quite aggressive. But we probably should be aggressive in the current climate that we're in at the moment with this bullish stock market. So I'm going to use that. This low here to this high. And actually on the weekly, it doesn't look too bad either. If you want a more conservative approach, then I'll probably say look for the weekly level, which is there. But sometimes you have to be a bit more aggressive, especially when it's when the market is so bullish, like it is in the stock market at the moment. Now, should this be our swing high from this leg, then what I'm looking for is, again, I'm going to go down to the lower time frames. 4 hour. You can see basically on that 4 hour time frame, we have got a 4 hour. See, it classes this as the order block, but I would class this as the order block, to be honest with you. And this is sometimes where you can't just rely on the indicator. It gives me a guide. Again, I'm not going to remember that mistake I made on gold. I'm not going to do that again. I'm going to make sure that I use these key levels as initial entries. And I'm going to look for maybe something like this on the US 30. So it would mean a pullback of some description and then a move higher. Simple as that. The S&P 500, again, what do you do here? Because this was my previous fib. Up from here, you can see that we barely got the 38 point. We got no, it's just a pause really. Then we went higher again. So again, I'm waiting for this bullish leg to be completed. I'm waiting for some sort of pullback or pause from the highs into one of the key levels, and then again trade it higher. We haven't quite got that yet on the SP 500 because you can see we're pushing. We're already at all-time highs and pushing higher as we speak. So I'll have to update you guys on that one should a new opportunity arise, or should the market eventually top out for a brief period. Similar thing to the Nasdaq. My Fibonacci was from this low to this low. I had a buy limit set at 19,134, and you can see I even had an alert set for when I get tagged in. That can now be deleted. I can delete that from my MT4 as well. And again, unfortunately, I can imagine this is a market where you have to deal with FOMO, fear of missing out. But it's fine. I'll just wait for that. I'm going to wait for that structure to form. I'll use the most recent bullish move, and I'll just repeat the same process. You can see how you're probably thinking, God, it's almost boring, right? But that is how to trade. It's you follow your rules, you follow your process, and all you've got to do is execute. That's all you've got to do. So again, I'm waiting there on the Nasdaq. So there's not really much opportunity for me in the stock market at this period in time. And that really concludes the breakdown from top to bottom of my charts. Obviously, I don't do it on the VIX or the dollar because you can't trade those markets. I just use them as analysis. So to recap, cable, waiting for a liquidity sweep or a break of this swing low. Euro dollar, I've got 2 potential sell entries. So I'm going to go and place those limits after the stream. Dollar yen, waiting for the bullish leg to be completed and waiting for the pullback. Dollar CAD, same thing. USD Swiss franc, got an entry potentially here at 0.85 should this high hold. Aussie dollar, waiting to see how we react from this order block. Gold, again, waiting for a new leg. Oil, I've got my limit set in. And the 3 stock markets, apart from the US 30, there is a limit we can set on US 30, but on the S&P 500, on the Nasdaq, they are what I call in no trade state, which is basically where we're waiting to see the and I call it the leg of the move. I'm waiting to see that leg be either completed and then moved, or I'm waiting for an entry. They're the 2 sort of states that I'm market states that I'm in at the moment. So there's enough there. Got to exercise some patience now, and then once I've done that, I now feel fully caught up with everything that's gone on, and I feel fully on top of the analysis. And all I've then got to do is keep coming back and topping that up and refreshing it and topping it up. Am I in a trade and all I've got to think about is managing that trade live? So I've taken all of the emotion out of it, and all I've done is follow the process. And hopefully, you guys can do something similar in your trading. It doesn't have to be the way that I do it. It can be your own way, your own footprint, your own edge in the markets. But how we execute and how we analyze should be the same. There should be a process into what you do. That's my process. I'll then now go and set my limits and set my alerts. And then I don't need to check anything once a day for 20 minutes or so. That's all I need to do. Obviously, I am checking it more than the average person would because of my job. But that's in terms of being a trader, that's how we do it. Okay. Right. Okay then. Hello, GWB. Do you have a lesson in the trading room where you talked about the smart money concept indicator? We should have. I believe I've done a stream on it before. Just hold tight for a second. I'll just try and find that for you. Okay, so not that one. Yes, I did. I've got it. Right, I'm going to send this to you in the chat room. Dillaby, there's a stream there on how we use the Smart Money Concepts indicator that I've just been showing you in the stream. I've just dropped that in the chat room for you guys, and you can watch that if you wish. Any other questions, anybody? Hello to Benangoli. Please check for CAD Japanese yen. Let's have a look. How I would analyze CAD Japanese yen would be, where's our swing move? Where's our leg? There's our leg. No worries, Dillaby. Hope that helps. Turn on the indicator. Oh, there we go, look. And this is exactly how the strategy works, or my strategy. I've not got it from anyone. I've just used it myself, really. I've just combined some concepts. There's no such thing as a holy grail strategy. But look, there's our swing move up to this high. 38.2% had a 4-hour demand zone or order block. And you can see we would have if I was trading this market, I would have gone, right, here we go, and we currently would be trading at a 1-to-1. So it's a 4-hour chart, so I'd have done 2%, so I would have already closed 1% profit on that trade. So my view for that is I think that we could potentially see a move up to 110 on CAD versus the Japanese yen, and I think that looks pretty good. Should we now get this, and this is why I always protect my trades when I get to 1-to-1. Should this happen, then you can see we've actually also got the 50% of this fair value gap, which sits at the 50% of the Fibonacci 1 hour time frame. Nothing really at the 61. So then my next potential support zone would be at the 50% here at 10. Sits at 107.3. Yeah, so to go, yeah, there's not much movements during London Open nowadays. No, I would say if you trade in the Opens, the US Open is the best, right? It just is. Volatility, it's been a pretty good summer, but I would agree with you, sort of guys. Sometimes I personally find the European sessions quite tough to trade. I'm more of a trader in the US sessions than I am in the European and London sessions, to be honest with you. So I feel your pain there. No, I don't, Matthew. I set the limit orders on most occasions, unless for some reason I've not quite followed the rules, or there's some ambiguity there. Then I would wait for the reaction. But typically, once I've already broken it down and I can see the order block, then I just sort of set the limit at that order block or FVG. Okay, good stuff, everybody. Thank you very much for tuning in this morning. That was my first stream back. It was a pretty long one, nearly 50 minutes. So that was a full breakdown and me catching up with the moves as well. So I'm now fully on top of all my analysis, and I will just update accordingly on other streams. And we're going to look tomorrow at the trend rider strategy as well, which is another strategy that I trade, and we're going to see if we can get any nice market opportunities there. And until then, I do hope everyone has a good trading day. It is Monday, so plenty more moves coming out later in the week, but it may be a bit of a slower week than what we've been used to. So don't get disheartened on that and remain patient in the markets. Okay, thank you very much. Take care, trade well, and I'll see you soon.